GM, good morning. Welcome to the Milk Road Show, the daily crypto show for markets as wild as trying to guess if your kid's about to take a nap or stage a full-blown meltdown. I'm your host, Jay Hamilton. It's Tuesday, April the 29th. Now, today's episode was recorded yesterday, live on Twitter. Everyone wants to know right now in this market, where are we going next? Are we headed to Valhalla and we're going to pump, and this current rally is the setup for something much bigger? Or is this a trap? In order to break this down and to give us predictions on Bitcoin and some other altcoins, yes, there might actually be an altcoin season, folks. We have Jamie Coutts joining us, Chief Crypto Analyst for Real Vision. Jamie's going to break down his thesis for the bullish Trinity that he sees right now. He has three key indicators that are setting off alarms for him on a setup that he is feeling really good about. So we're going to jump into that. Before we do, if you are swapping right now, and I know y'all are swapping because there's a lot of volatility going on right now, and there's some opportunities out there, you might want to check out Milk Road Swap. You can do so at swap.milkroad.com. Why do you want to check it out? Because we've got some of the lowest fees in the space. We built this swap for you guys, not so that we can make money, just so everyone can have a cheap and easy place and a safe place to swap. Just 15 bips on swaps on Ethereum, Arbitrum, or Base, and even less over on Solana. Today's episode is brought to you by Ledn. Get cash without selling your Bitcoin. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Without further ado, Jamie, welcome back to the Milk Road Show. Oh, I muted you, Jamie. There we go. That was my fault, Jamie. I did that. Sorry. Go ahead.
Hey, Jay. Nice to be back, man.
Yeah, good to see you. Sorry, I muted you. That was my mistake. Okay, Jamie, let's actually go back. Last time you were on the show, we had you on the show in February, and this was right before we hadn't quite gone into Trump tariff mania yet, but a lot of the global liquidity indicators were already setting off some indicators for you and what you were seeing. Now, here we are. It's almost May. We've basically been down or flat since then, since we had you on in February. When you step back, what are you seeing right now that is getting you excited about the future?
So we had this like a COVID moment really in March and April. And so I think by the end of February, it was pretty clear that markets were starting to roll over. So it wasn't as if that was a good time for markets with the price action that we were seeing. Yeah, so it was really, so the dollar was leading everything at the end of last year. The dollar tightening led to a severe tightening of financial conditions in Q4. And this was being flagged by myself back in sort of November, early December. But at that time, the markets were sort of just pricing in the euphoria around the Trump administration coming in and this change in sort of atmosphere when it comes to crypto, but also risk assets. The tightening that happened in Q4 led to really a downturn in a lot of the indicators in Q1, and then markets started to understand what was at stake with the Trump tariff policies. But as we sort of moved through Q1, we were starting to see the dollar crack. Now, when you start to see that, then you start to see large velocity moves in the dollar, that as expressing an easing of financial conditions globally. And so while everyone was looking at what was happening with tariffs and, to some degree were, I think deservedly sort of concerned about how bad it would get, because in typical Trump fashion, he took everything like balls to the wall. But if you really understand what Trump does, that's generally where he starts, and then starts to sort of backtrack or use it as a negotiation tool. But that aside, we started to see the dollar break down, and that improves global liquidity. So everyone's now really familiar with global liquidity aggregates. It wasn't as if we saw a lot of central banks cutting rates or adding direct liquidity through asset purchase programs or anything like that. There was no QE. There were some rate cuts globally, so the central banks were easing, but they weren't easing massively. But really, the easing in financial conditions was coming from the dollar. And it was in really when it broke down through sort of 104, 105, and we had this very strange pattern where the DXY declined by 2.5% over 3 consecutive days, which is rare. We only see them a couple of times, really. We've only seen them a couple of times in the last decade. What has generally happened 90 days later is that asset prices are a lot higher. And so that was the first signal. Then I started to see, my liquidity aggregates all start to break out higher. And then I waited for some other signals, which happened in really the end of March and the beginning of April, which we can go into. So it was really setting up the environment for a reversal in risk asset prices. And we all know that Bitcoin is the best performing asset relative to every other risk asset. And if we were going to see sort of the conditions that I thought that were sort of that I was starting to see emerge, eventuate, which I believe they have, we would see a rip-roaring alt season.
Sounds good. Make it happen, Jamie. Please, please, please. So this bullish Trinity setup, can you just summarize what the three parts of the Trinity are?
Max fear, and you can measure this through various different indicators. The one that I've used is the VIX on the S&P. Long time series, S&P is the sort of global benchmark for risk assets. We saw readings on that we've only ever seen during major market sort of collapses right at the bottom. That was one. Number two, following max fear indicators, we saw a breadth thrust on the S&P and equities. So this was actually something that I had cultivated over like many, many years. They only ever happen. I'll have to go back, and I've actually got the chart so I can bring up the numbers, and it's in that report that I shared with you from Real Vision. But these
We'll bring it up in a sec. Yeah.
They only happen like a couple of times a decade as well. And that is when we reach max fear, but we see a day in the S&P where 97% of all the stocks are up. And that's a breadth thrust. Now, a breadth thrust on its own is a bullish signal. When it happens after a capitulation max fear event, you've got a confluence, at least for risk assets and equity specifically, of a bottom, a potential bottom in the market. Then you sort of layer in what's happening on the macro front. And that was really the liquidity environment improvement, the easing in financial conditions, with the dollar falling from 110 down to 99. It's now 98. And, you can interpret that as, capital flight leaving the United States. I don't really buy into that argument. What it is, though, for the world is a massive easing in financial conditions, because a lot of the debt is US denominated debt. And in emerging markets, when the dollar is actually falling, it allows them to repay those debts more easily. So all of those things put together, put me in a very bullish position at the start of April.
Right. Where, as we'll get to, you would typically, when these conditions exist, see crypto and even altcoins outperform in the coming months. Okay. I want to get into all of that, but let's first dive a little bit deeper on each of the points of the bullish Trinity here. So take us through what you're seeing on max fear. Let's talk. I'm going to bring up the VIX chart so you can talk us through this.
Yeah. So what you're showing here is Bitcoin and the S&P VIX, right? So the volatility index, and I've drawn and that's in the subchart. Now, the green line just represents an arbitrary level where the VIX sort of breaks or gets above. And when we've seen breaks above 40 on the VIX, they've occurred near or at the capitulation lows for the S&P. And so I've just overlaid those indicators onto the Bitcoin chart to show you, to represent, where it's happened in relation to the Bitcoin price. And you can see that it's really clustered at times of max fear, obviously, but also quite closely to Bitcoin lows. Actually, sorry, this is the S&P chart, right?
This is the S&P. Yeah.
Yes, there's an incorrect label there. But you can see on the S&P that it has occurred at those lows or near those lows. Now, sometimes they cluster. You get multiple readings above 40, but that's only really occurred in large clusters when there's been a major financial crisis, the GFC and COVID. I don't think we're experiencing anything quite like that. So it was through I think one or two readings that we saw just recently, which was, I think, sufficient enough to price in max fear for the S&P, given we're not seeing anything that suggests a default on global collateral like we saw in the GFC, or a shutdown of the economy completely. I mean, everything is being walked back. Everything is being renegotiated on the tariff front. It's going to be a lot worse than what people were predicting in March and April. Sorry, a lot better than what people were predicting.
Yeah. Certainly, the market sentiment is very much as if this is a major economic collapse, but we're not there yet, at least. And
I don't think we
will be. Yeah.
No. I mean, it was, we've got an administration which is pretty bombastic, but also has a massive problem to try and fix. And their solution was go hard, go early, right? To try and fix it. It shocked the markets, but it effectively gave them something that they needed, which was an easing in financial conditions. They got rates relatively down. Now there was a spike back up, but now they're falling again. And, they set up the environment for the Fed to increase liquidity, add, interest rate cuts or more interest rate cuts that were being priced in. And remember at the start of the year that I think markets were pricing in maybe one or two cuts.
One or two.
Now that's changed. If you look at all the production numbers, we've got, soaring inventories and new orders collapsing. Now that's going to feed through into the economic data, and that may suggest, and that may concern a lot of people, that the economy is softening. But this is the environment where asset prices do really well, because you'll have to see the Fed start to ease, and in that environment, you get the best returns.
Selling your Bitcoin should be a last resort when you need cash. That's why there's Ledn, the trusted platform for Bitcoin-backed loans. You can unlock cash in as little as 18 hours with no monthly interest payments and no prepayment penalties. They've issued over $9 billion in loans and never lost a single Satoshi of client funds, even during the chaos of 2022. If you're a long-term hodler, this is the move. Get liquidity without selling at milkroad.com/Ledn, spelled Ledn. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Stakehouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. And I want to touch on where the Fed's at and them getting into the danger zone and how that impacts liquidity when we talk to their refinancing issue, which we'll talk about coming up. Just to finish the point around the current setup of max fear. So the question that I have right now is just, are we in a short-term rally? Are we at the beginning of a major liquidity event coming? What is giving you the impression that this max fear, this spike in the VIX, is going to lead to better gains in the future?
Well, it's allowed asset prices to reset, number one, but unless you've got the trajectory for economic growth and the conditions for high asset prices, that's not enough. So what is actually built into the framework, which gives me sort of a positive outlook? And so, I fall back on a lot of the work that Julian Patel and Raoul Pal does at Real Vision for their business cycle analysis. And, the ISM sort of was above 50, and it sort of has now fallen back below 50. Above 50 means expansion. Now, we'd had, 2 years of a sort of contraction in the business cycle, right? A downswing in the business cycle, which sort of bottomed in at the end of 2022, early 2023, and has now been sort of gradually moving higher. But that recovery has been elongated by the economic conditions, or really what the central banks and liquidity have allowed for. So we're not as if we're at the end of a bullish cycle where there's a ton more downside. We're actually in recovery phase, and we've just experienced a max fear sort of capitulation before we'd even reach the fall or the end of the business cycle. So business cycle is recovering. And now everything that's happened is giving the central bank, which had been resistant to adding more liquidity, cutting rates because they're worried about inflation, now I think the cover that they need to actually do so. At the same time as the US government needs to refinance a ton of debt, $9 trillion of its $36 trillion outstanding needs to be refinanced. So it's only going to happen in this environment where there's, there is actually, less gut sovereigns buying US treasuries. I mean, there isn't a buyer's strike, but it is, you could argue that you're starting to see the signs of some withdrawal. Now, who's going to make up the shortfall? It's going to have to the Federal Reserve and US banks. The outlook is pretty bullish based on the business cycle. Where we are in the liquidity cycle is we're just starting the next major swing higher. And when you put those two together, that is what makes asset prices go higher.
Okay, I want to touch on a few different things, get deeper into them. But first, I just want to, so when we think about the Bullish Trinity, max fear, we've got that set up. We feel good about, well, you can feel good about this type of fear in terms of what the historicals typically say comes next. When we look at liquidity and where we are right now with liquidity, you've talked about the breakdown in the dollar and the impact that that has on global liquidity. When you have a macro state indicators, an MSI, as you call it, that you've built, when I'm going to pull up this macro state indicator, because I would love you to just talk through these three indicators and why they are the setup is so good right now, so positive right now.
Right. So the three components are global money supply, global central bank balance sheets, and the dollar. And so when all three are bullish, when they're exhibiting bullish momentum, we can generally backtest a system which shows that Bitcoin outperforms, or a strategy where you're exposed during these periods of macro bullishness or macro and liquidity bullishness, then you can actually outperform on a risk-adjusted basis. So, I don't invest purely based on this indicator because, I own Bitcoin and various assets for the medium to long term, but it does give me an understanding of which regimes are most supportive for these assets. And we're currently in one of those.
Okay. And now I want to switch to what you were just talking about a few moments ago, which was the bond market variable here, because the bond market plays a pivotal role in the liquidity cycle. And there's some dangerous things happening in the bond market, and which you were just mentioning, but can you just go deeper into them a little bit more?
Yeah. So, I mean, at the time that I wrote this, the two areas, or the area that was the most concerning was what was happening in the bond market, expressed through just the yield on 10-year bonds, and also the volatility that was showing up in the bond market. And so from a US government's perspective, and really the Federal Reserve's perspective as the sort of overseer of the of US treasuries, anytime volatility increases in the treasury market, that is concerning. It's concerning because when volatility increases on the global collateral asset, it will result in a massive pullback in risk taking, right? And the whole system is highly leveraged. Treasuries through the repo market are extremely rehypothecated. So when haircuts are given to lending ratios, or the inability for financial, or for companies and also financial intermediaries to borrow through that market because of heightened volatility, that's a concern to the Federal Reserve and also the government. So at the time, the move index was 137. It's now down to 105. I think the US 10-year could be around 4.25 now, so it's backed off a little bit. So those conditions have eased. And so, but they are definitely worthy of keeping very close attention to, because if they both start to move higher, which they typically will move higher together, then that would be concerning for risk assets because it sends a signal. But ultimately, what's going to happen? The central bank is going to have to ease. They're going to have to introduce extraordinary measures to calm the bond market. So all things lead to the same thing, which is debasement of currency, more liquidity, which assets perform best in that environment. it's Bitcoin, and with a much more sort of cyclical, volatile pattern, high quality alts.
Okay, let's go to the GMI, the global liquidity, GLI, the global liquidity index, because as you mentioned, your hypothesis is that liquidity will increase right now. Where are we right now, and where do you think we could be the rest of this year, the rest of this cycle?
Yeah, I'm actually doing some really interesting work on sort of modeling out the GLI and the impact for the whole crypto complex. So not just Bitcoin, but looking at different indices and different sectors within the crypto economy. We've only got data going back to sort of 2020 on this, and I use a index provider called Bitformance, which I've worked with to develop these crypto indices, which are really now, available for retail. So people should check it out. This chart, I think, was from the end of March, and really where we're at now, it's already broken out. It's a lot higher now. It's being driven by the dollar, because the aggregates that it's measuring are priced in dollars. So when the dollar, the DXY falls, naturally this aggregate will increase. But, people would argue that's just, that's not the same thing, but the correlation is there now. People would argue that, it's a spurious correlation. Well, it may break down in the future, but, from a first principles basis, it makes total sense, right? If there's an easing in financial conditions, there is usually more liquidity available to invest. That money flows into sectors where it will seek the best returns. Traditionally, we've got time series which track all the asset prices, and we know which assets traditionally have done well in environments where the dollar's falling and global liquidity is actually improving. So the GLI index here is already at new all-time highs, and I looked at sort of what to expect based on in the past where the GLI has broken the previous high. So it's had a period of contraction or sideways range, which we've been in for 2-3 years now, the longest sort of contraction period in Bitcoin's history. And that's really a hangover from the excessive liquidity added in the COVID period. The extraordinary measures they had to bring in after they tanked the economy and shut us all down. So now we're out of that period of contraction, and like the understanding is that global liquidity has to rise. It has to rise because global debt to GDP is 3.5 times. So you have to support the collateral, otherwise everything collapses. So okay, fine, they had to address the inflation situation, but sooner or later, the US government with $9 trillion due this year needs to refinance. Liquidity has to come back in. I think, we'll probably see a 10% increase in this aggregate over the next year. Modeling it out based on, different ways to regress, prices versus GLI for what it's worth, is likely to see Bitcoin, trading above 150. The model actually suggests around 180, which is the result of a different modeling exercise I did in Q3 last year when Bitcoin was around 62,000. So about 180,000 by the end of 2025. And so this is just a different way to do it, using different methods and a different indicator or index, and kind of arrives at the same price. But what's interesting here is, Jay, is the way that other assets within the crypto complex react when we're at this specific point where we're breaking out to new all-time highs on GLI. And it's actually altcoins, specifically the smart contract platforms that do really well in this environment. DeFi and applications do as well, but the data in the time series isn't as strong as it is in smart contract platforms. But the Bitformance indices go back to 2017, but they do experience a pretty big uplift. And maybe this time around, DeFi applications do better than some of the smart contract platforms because they're cheaper, and they're starting to exert some sort of moat or customer ownership, or user ownership, more than the smart contract platforms. Who knows? But actually, we're in this sort of juncture where typically you do see outperformance of altcoins, and we're started to see that. And I was talking about it on my breadth indicators in the report as well.
And I want to get to which altcoins you're looking at and which ones you're liking. And Sui's one that's been ripping recently that I wanted to chat with you specifically about, because I know you've done a lot of research on that. But before we jump into that, let's wrap up the third part of the bullish trinity. So we've talked about the max fear that we've gone through. That is an indicator of usually a reversal and a recovery and a good setup to come. We've talked about liquidity. I think you're saying liquidity up 10% from here leads to would on your model lead to Bitcoin around 180K. But 10% liquidity increase is a pretty conservative estimate in my view. I mean, I think we could see a 20% liquidity increase, in which case Bitcoin and alts could be even higher than that. Would you agree with that?
It's definitely within the realm of possibility. I don't think we're going to see anything like 2020, which was, I think, about a 20% uplift in year one, and then it continued to increase in 2021, but at a slower rate. But that's where that's a critical sort of understanding to know as well. So when you're tracking these measures, it's the rate of change that really matters more than the level. But so we're in, I think, a period where the rate of change will be most aggressive, and this is really where you capture the most gains. But yeah, there's a possibility. I think I tend to use the more conservative 10% in just my modeling, but I do in that report, I think you saw that I did add the 20% and what that would mean. And it's like, prices get a little bit silly, so I don't tend to talk about them as much.
I mean, it certainly feels like, yes, the prices get silly, but also that's what happens when we get into these euphoric bull markets. The prices really do get silly. So don't put it totally out of the realm of possibility. But let's talk about the breadth thrust that we saw recently. You mentioned this a little bit at the beginning, but can you kind of walk us back, explain what happened here and why this is such an important indicator for you?
Right. So you've got the chart up, and it's the S&P going back to 2005. And so I think there are 5 of these events that have taken place during the last 20 years. So they're significant, they're important. Now, from a statistical standpoint, then people would argue that 5 events is not statistically significant, but it's the best we've got given the data that we have. And 20 years of S&P data, I think, is a decent sample size. And what we've seen is when we've had max fear followed by an extremely bullish reaction off a low, then it is a tilting of the supply-demand equation back in favor of the bulls. When 97% of the index is up following a day in which there was a huge decline and the VIX spiked well above 50, I think, on the day, the combination shows that there was a real inflection point. Capitulation meets overwhelming buying response the following day. And so I think it's significant, and it has always set up a bullish market environment for the next 90 days, 180 days, 365 days.
Okay, let's shift to portfolio allocation and some specific tokens you're liking. I want to, before we go into altcoins, let's just chat a little bit more about Bitcoin. What would you want to see? So cycle, you're thinking Bitcoin could hit 180 base conservative estimate. Maybe we can get into some silly numbers higher than that if we get a much bigger liquidity injection here. What are you watching for Bitcoin right now? What are the support levels you're looking at?
Well, the support level that was reached back end of March, start of April, sort of, where was that? 74, 75,000.
Yes.
Which was the level that I was, during the period I was talking about, because that was the exact level that was the top of the range from the big pullback sideways range that we had last year. And we should also caveat, as when we say these big pullbacks, it was a 30% pullback.
It was just 30%. Yeah.
It's 30% in a 90 vol asset. That these things happen year in, year out, every bull market, many, many times. And you get the same panic and everyone shitting the bed, as they always do in a panic. And it was actually, I made this point recently as well. It's a fascinating point here, Jay. Like, you get these people that go on CNBC, they go on Bloomberg News, and they talk about how Bitcoin has underperformed. It's like, these guys are supposed to be managing money for a living. When you adjust for the volatility of Bitcoin, it has massively outperformed the S&P.
Yes.
2.5 to 3 times the volatility in Bitcoin versus the S&P. The S&P was down 19%, 20%. from peak to trough, Bitcoin was down 30%, 31%. It massively outperformed on a volatility adjusted basis. And so I was writing about this back in the bear market of 2022. When I look at each consecutive bear market and look at risk adjusted returns, Bitcoin back in the 17 or the 18 bear market, you rank all global assets, commodities, fixed income, different types of equity markets, emerging markets, you name it. Bitcoin was right at the bottom. Come to the 2022 bear market, on a risk adjusted basis, equities was below, even though Bitcoin had fallen 75%. Given the volatility in every other asset class, Bitcoin is starting to look a lot better, even though it falls 70%. Now, to us who are looking at our portfolios, we might not think about it in that way, but it's very important for asset allocators, for multi-asset managers, because they run the models based on historical volatility. And I would argue that Bitcoin is getting less volatile in absolute terms. So volatility is compressing over time in Bitcoin itself, but it's also becoming relatively less volatile as other asset classes get more volatile. Mm-hmm. And I think that is my interpretation of that is the whole free art system is just, it lurches from one calamity, one crisis to the next. Volatility is inherently getting, the instability in the system is increasing. And as people look at Bitcoin and go, wow, that's a really volatile asset, what's actually happening is everything else is getting more volatile. Bitcoin's getting less. And so from a portfolio asset allocation standpoint, that means asset allocators will start to increase from maybe their 0.5 or 0.2, their tiny holdings, maybe it's 0.75, 1%, 2%, 3%, because from a diversification standpoint, it actually makes a lot of sense. Yeah, so that was the outlook on sort of the performance of Bitcoin.
It just feels Bitcoin feels like the easiest trade of all time right now. Like it's the no-brainer trade. And I know it's maybe if you're in crypto, it's certainly not the most exciting trade to listen to a podcast and people to tell you to buy Bitcoin. You're like, come on, folks, like give me something else here. And we are going to get into some other stuff. But it for so many reasons, it is just lining up. And we've been talking about a lot on the show. So I'm not going to open up the deeper Bitcoin conversation here. Let's talk about, I want to touch on MicroStrategy first, and then we'll get to altcoins. What are your thoughts on MicroStrategy?
Yeah, so I've added it to the pro crypto portfolio. Apologies, back in March, because as I was starting to see the confluence of indicators, not everything was in place, but I thought where it was trading relative to the old resistance level, that it was going to actually, that there was enough evidence there to buy Bitcoin. But I went for MicroStrategy as a higher beta version of that. Now, there's a risk there. MicroStrategy has a lot of inherent risks because you're trading an asset or you're buying an asset that trades at a premium to its net asset value or its Bitcoin holdings. And that is that's a premium that's built in based on the expectation that MicroStrategy is in a unique position to continue to acquire more Bitcoin versus the dilution that's required to buy more Bitcoin, that the market will continue to support this thesis and support this policy, and that they'll be able to generate new forms of revenue from Bitcoin in the future through lending or various other services as Bitcoin becomes a global reserve asset, strategic asset, and more integrated into the financial system. That being said, the NAV spread or that NAV premium had come down in March significantly. It was trading on a non-diluted basis around about 1.6. On a fully diluted basis, I think it was about 1.8. And that was at a level that I thought was reasonably attractive for MicroStrategy. So I added that as a play, and it's done okay. It's been slightly outperforming Bitcoin, is what you expect. But I think I backtested, look, what happens during environments where liquidity really ramps up, MicroStrategy tends to outperform. So, I don't think I bought into the thesis that, MicroStrategy forever. And you've got these hardcore MicroStrategy bulls, and they make a compelling case. And some of them are very, very smart corporate finance guys, and they understand the mechanics of what Saylor is trying to do. But just in the last, week, we've seen the entrance of a brand new player, I think the company you might, I don't remember the name of the company, but you might. Is it 21 Capital or the Jack Muller's?
Yes, yeah, I think it's 21 Capital. Yeah.
Yeah. Now, they're not Microsoft. They don't have the same. They don't have the same, I guess, credibility in respect to being able to execute this strategy for the number of years. So they're new, but they are a serious competitor now. And what that does to the MicroStrategy premium, I'm not entirely sure, but I'm still comfortable with holding MicroStrategy right now because they are the market leader in this. And every time 21 Capital, whatever their name is, comes in and buys
21. It is 21.
Okay, 21. So it's going to push MicroStrategy up. The question is, am I right on the premium, on the NAV premium? Will it compress or will it expand? Does this new entrant actually make the case for MicroStrategy even stronger? Not necessarily sure, but it's only, so I added it as a beta play on Bitcoin because I'm sort of at a max position in Bitcoin as it is. Then I turned away, look at some of the altcoins because we are at this really interesting point where altcoins will perform. Now, the structural issue in altcoins makes long-term investing in that space extremely difficult, and it's a structural problem that needs to be addressed through higher utility and usage, and to better tokenomic policies, better listing TGE events, which I think is going to be partially addressed through new regulations like Fit 21 by the end of the year. All that being said, high quality alts, I think, are a slam dunk at this point, given the 60 to 70% pullbacks in most cases. So Sui was one that we had in the portfolio. I added it in October at $1.70, went all the way out to $5. It came back. I added it last week before it ripped. And the reason for that was actually just looking through the fundamentals of Sui. So I've built dashboards. I've been backtesting a lot of on-chain metrics. There's a lot of noise, but there is some sort of signal in seeing on-chain metrics where you're seeing network activity grow.
Mm-hmm.
And I just saw that during the last sort of 90 days, especially the last 30 days, Sui was outperforming. Price was down considerably, but actually it was outperforming in terms of fees. TVL was ticking up, stablecoin market cap was ticking up. And these were signals that actually, more capital was flowing into the Sui ecosystem despite the price action. And I knew that given that where we were in the cycle and things, that if that was the case, then it should outperform everything else when prices start to reverse. That was the first of two sort of additions. The other one was Tron.
And before we get to Tron, Sui up 60% roughly in the last week. Should have got you on the show over a week ago, Jamie, before the Sui pump. But some of this is it sort of caught the narrative, and a bunch of attention was on it as well. Still feeling good about Sui even after this 60% increase.
Yeah, I mean, given what I've sort of laid out in terms of where I think we're going in the next 6 to 9 months, maybe even longer. Yeah, I would expect it to be, multiples higher. Solana reached a market cap of around 80 billion in the last cycle. So there's definitely a couple of multiples on Sui, provided they continue to execute on the strategy and grow. It comes down to, growth of adoption. If those numbers start to slow, while other networks start to grow, then that will cause me to change my view on Sui.
Okay. Let's go to Tron, was the other one that you mentioned.
Yeah, Tron was an interesting one for me because I've totally shit-canned that network for years. And look, that, I always try to outline the risks right up front. So this is not an asset that is, devoid of risk. This is very much a controversial network because it is, by all accounts, pretty much controlled by one person. It is not decentralized in the traditional or in the blockchain sense of the word. So you've got key man risk, and you've got all sorts of issues that we've seen from similar situations in the past where networks have been extremely centralized. In saying that, it does $9 million a day in fees. The next biggest network is, you might have the chart, I think is Ethereum or Solana at around 1.5, might be there. It is Now, are people trading NFTs? Are they doing a lot of DeFi stuff? No. What are they doing? They're using it as a stablecoin platform. It is a peer-to-peer way to move US dollars globally at a fraction of the cost. So it is used for that and used for that one thing only. And given that stablecoin growth is going to continue to accelerate with the stablecoin bill in the second half of the year, I think that that asset should continue to do well. Now, I looked at it also from like a, on my trending indicators and my relative strength indicators, and it was all very, very positive. But what I've come to sort of understand from the last week of price action is that Tron's been underperforming. And I think that I'm still going to hold that position, but I think it's underperforming right now as everyone sort of goes back and tries to basically buy the assets that have underperformed the most. Is that a lot of investors, a lot of digital asset crypto hedge funds were probably hiding in Tron as as a lower beta play as the markets were tanking. I think we saw that in BNB as well. And there's been a bit of a rotation out. Now, the Tron's up, but it just has underperformed those other assets. But I think given the fact that the network is growing, fees are growing, number of users are growing, stablecoin market cap is growing, then this is an asset that will continue to do well, caveated with the risks of the fact that this is a highly centralized and controversial network.
Yeah, I've got the daily fees up here in this chart. Yeah, 9 million a day for Tron, and next closest is Binance at 600K, Bitcoin at 440K. Like there isn't even anyone in the ballpark.
Yeah, I think this is being ranked by fees on a 90-day percentage change. So it's not showing, I don't think it's actually showing Solana and Ethereum, but they're doing over 1 million a day. But the point being is that 8% increase that Tron, that the 8% increase in fees over the last 90 days in Tron is actually more than, or it's slightly less than Ethereum and Solana do in a day. So it's astronomical. Now, there's probably a lot of spammy, illegitimate sort of transactions, wash trades, or whatever that's being used on Tron. So, you have to take it with a grain of salt. And that's why, it's a very small percent of the, overall holding. But it is quite striking when you look at those numbers relative to the other networks.
Okay, last question before we let you go, Jamie, is when do you think we might see this altcoin season? I know timing is very difficult to predict, especially on something like altcoin season, but what are you thinking? How are you framing that in your mind?
I think we're in it right now. We're starting to see the very early stages. If I look at the Altseason index that I've got, if I look at the top 200 equal weighted index versus the market cap weighted index, which is an excellent way to look at, which large caps versus small caps, which ones are outperforming or underperforming. We hit a level which was consistent with where alts reversed and did a pretty impressive 6 to 12 months at the end of 2020, start of 2021. So I think the conditions were that everything was washed out, and now we've got the conditions which sort of lay the groundwork. But I don't think that this is going to be, a broad-based, what I should say is that in alts, the outperformance that we've seen this cycle have lasted usually around about 3 to 4 months, and it hasn't been equal across all alts, right? So there has been quite a bit of dispersion, which is good to see, because you can't have low quality assets outperforming high quality assets, and I judge that by basis of like what's the adoption. You should not see that for continued periods of time, because the defining difference is ultimately, are these things being used? So what I expect to see is, the next sort of 3 to 6 months outperformance, but again, like using fundamentals to sort of navigate like which one should actually outperform is going to be key, because it's not going to be evenly spread. Just buying any old application or second tier, third tier smart contract platform may have, very high volatility and returns at certain periods, but it's rarely going to be sustained.
Yeah, we're growing up as an asset class, and it's not the same as in past cycles where throw a dart at a board of any altcoin. There was only, in past cycles there were only a few thousand tokens, and even in the last cycle there was probably only about 10,000 tokens, and now we've got millions of tokens, and it's just the dispersion makes it so much more difficult, which is why there is an opportunity, but you unfortunately now need to do your own research and think for yourself and develop your own conviction. So hopefully that's why you come back and listen to the Milk Road Show every day. Jamie, thank you so much for joining us today. Really appreciate your time and you breaking this all down.
Yeah, it's great to be back on, Jay. Thanks very much, man.
I want to remind everybody, you can follow Jamie on X. And if you want to learn more about the reports he's putting out, you can check those out over on Real Vision. Good friend of ours. They're putting out amazing stuff over there. Thanks so much for listening in, everybody. Before I let you go, I always get asked what crypto card I am using, and I use crypto.com. Why? Because no annual fees, up to 8% cash back in crypto, so you get more money on chain. Lots of great perks, Netflix, Spotify subscription. And if you're a traveler like me, you get lounge access when you're traveling to crypto conferences around the world. Hit the link in the show notes if you want to get your crypto.com credit card today. Thanks so much for joining in, folks. Appreciate you. Appreciate your time. Have yourselves a wicked awesome day. We'll see you guys back again tomorrow. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only, and nothing we say is financial advice. Investing in crypto or any asset is risky, and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.